October, and now most likely November too, have been rough. It's never fun to feel blindsided, but we have to trade the markets we have, and not the one we wish we had. So let's take a calm, honest look at where things stand, what history suggests could play out, and whether there's any realistic light at the end of the tunnel. First, let's look at the technical picture. Bitcoin has lost some key levels, which significantly increases the odds that the bear market is now well in motion. Bitcoin has fallen below the 50-week moving average, having 2 consecutive weekly closes below it. Historically, 2 weekly closes below the 50-week MA have been a reliable indicator that mark the confirmation of Bitcoin bear markets. We've also lost the yearly open at around $93,000 to $94,000, and the weekly uptrend structure has also been broken. Only the monthly structure remains intact for now, but we'll have to see how November closes. That said, it will naturally take a longer time to get a confirmed monthly structure break, which would be a close below roughly $82,000. If you're planning to de-risk, it might not be wise to decide based on the monthly chart. Second, from a pure cycle timing perspective, this top would line up almost perfectly with the classic 4-year cycle we've seen the last 3 cycles, where the top forms in Q4 of the post-halving year. However, one complicating factor is that practically all the typical on-chain indicators have not signaled a top. You can refer to a previous video here on all the most consistent ones, but at this point, it's probably not wise to rely on these. On top of that, the market is absolutely apathetic. Social interest is abysmal. This is not characteristic of a typical market cycle, which tops on euphoria. Sentiment-wise, this is more like the mini 2019 rally, which was also marked by low social interest despite rallying prices. I mean, Solana spot ETFs got approved mid-government shutdown late last month, and hardly anyone noticed. Similar to 2019, this cycle is the first full cycle that we've had under truly tighter monetary conditions, and monetary policy may just not be sufficiently forgiving to encourage the retail risk appetite we're used to seeing in previous crypto bull markets. Besides, the hot trade these last recent years was AI, which has overshadowed crypto to a large degree. A little realistic light at the end of the tunnel is that early-stage bear markets share one thing in common: a relief rally up to the 200-day MA, which currently stands at around 110K, but will slowly go down the longer Bitcoin's price stays suppressed. With the US government reopening, along with any other potential bullish spark, these could be what's needed for a temporary relief bounce. But unless it reclaims the key levels mentioned earlier, it's likely safer to assume the bullish phase of this cycle is behind us. And as for alt season, a relief rally by Bitcoin might give some alts a bit of juice, but a true alt season needs retail excitement. Without that, we might see pockets of strength, but a full rising tide lifts all boats rally is unlikely unless sentiment meaningfully recovers. If we do form a lower high around the 200-day MA like we usually do and continue the downtrend, the little optimistic note is that if we topped on apathy, we may well bottom on apathy as well. This may mean a more subdued bear market where the decline is not as severe. Anyway, that's one take, but what do you think? Is it all over? What's your plan? Let us know in the comments.